This conference will now be recorded.
Good evening, ladies and gentlemen. This is CandleStick Trading Frank. It's 9:14 p.m. Eastern Standard Time on a extremely winter cold, freezing day. But I love the cold. It's all about cryotherapy. It is February 6, 2022. Time's flying. Valentine's Day is around the corner. Most importantly, it's Super Bowl Sunday. So there you go. Place your bets, like we do. Quantitative betting. Um, this is our regular weekend webinar. It's going to be on full blast. We'll be having the next one on Wednesday or Thursday, depending on the market. The markets have changed quite a bit. And of course, we'll be having again one on Sunday. And most importantly, all of you should remember that I do a lot more Twitter broadcasts, which keeps everyone grounded and not lost in the wilderness of what financial markets do. So please do listen to my Twitter broadcasts, where I'll be doing them more often. And also do some live screens so you can see what I'm trading, which I always obviously post prior to trading those particular stocks or options. So please focus on those. Full disclosure, this is purely for financial education, not for any solicitation or advice. And welcome to 2022 and a very happy new year, the year of the tiger for our Asian clients. I shouldn't say clients, members. And a year of the tiger is a year of strength and rebirth. So enjoy the food, but most importantly, keep in mind that this is the year that's going to make it all happen. Every year it happens, but this is the year. Focus on it. So that's my 2 cents. On that note, this session will be recorded and uploaded as we always did. There was a little lapse, a couple of months, but hey, different reasons. Um, and all that is good, and will be uploaded to our Clueless A Trading YouTube channel within the next 24 hours. In the meantime, this link will be posted on the real-time Twitter feed, and anyone who cannot attend tonight or is too lazy to attend tonight, which is fine, can listen to it um, at their own time. That's it. All right. So I have really nothing to say, because everything that I say or produce and suggest, remember, ultimate decision always lies with you all, is on the real-time Twitter feed. And I have been very selective. Overall, I'm doing quite well. And we have hit some major home runs here and there. All right. That's the way it goes. So a couple of broad points here. I don't want to get in too deep. I want to keep it nice and short. So, introductory, my stupid voice coming over the internet, is that the market has changed. The market, and this is very important for all of you, so please listen carefully. The liquidity swamp that the Federal Reserve Bank of America, the Fed as we call it, not the FBI, but the Federal Reserve Bank of America, and Chairman Powell, who I like, I would say 80% of the time, is starting to drain the swamp. And the swamp is the liquidity swamp. If you don't understand what that means, please Google it. Please go to Investopedia and try to understand that stocks go up or down. One of the primary functions on the financial market, just like any other asset class, whether it's real estate, whether it's crypto, whether it's any other, metals, commodities, because of inflow and outflow of money. So the inflow of money, which was the cheap money, the days are coming to an end. So what does that mean? That basically means that you have to be, as all of us have to be, not you, all of us, we're in the same boat. Don't forget that, okay? We're all trading with our own money. We're all trying to make a living. We're all trying to pay and try to reduce our taxes to the big red the crazy bureaucracy in Washington, D.C. And it doesn't matter what party is in power, they're always trying to tax us to death. All right? And you know me, I hate that. When my son was young, now he's older, he's 23, God bless him. He turned 23 in November. Very successful, very successful. Is He has that. So and this is something so simple that us as Americans and all of us who are here who pay taxes never really quite grasp it. They tax us. There's federal income tax, right? Then there is state income tax. Then there is local income tax. And then they tax us on every single frigging thing that we buy. Gasoline, okay? Clothes, food. There's always a frigging tax. We want to switch our cars, buy, another car. They tax us 6% in Jersey. Okay, in other states, the same story. We are sick and tired of taxes. So I explained that to my son, and he just looked at me and said, "That is so stupid." And that came from almost 10 years ago when he was 13 years old. And I said, "Yes, son, that is stupid. Why don't we just have a consumption tax? Why don't we just abolish the income tax and just have a consumption tax?" Well, I don't want to get into it. Consumption tax simply means that you will pay for what you want to buy. So if you are a little bit more frugal and you want to keep most of the hard work that you do, most of the money that you get, why give it all away to the government? Well, the liquidity swamp is starting to drain. The Fed is going to start raising rates in maybe in the next couple of months, and then they're going to start to reduce their balance sheet, which simply means the $9+ trillion of liquidity that we have injected in the economy since 2008, 2009, the Great Depression, the second Great Depression, is going to start to dry out. So what does that mean? That simply means that the hedge funds and the big players in our capitalist economy, the institutions who are basically literally playing with free money. We don't have access to the free money. They do. They can borrow from the Fed on overnight lending rates and blah blah blah. There's so many different mechanisms, and that's one of the reasons why markets went up that crazy, right? So now we have to be selective. And now this is not a stock market. It's a market of stocks. So this year, as we go forward, is going to be massively volatile. Whether you like it or not, I don't care, because you have to deal with it. And that means you have to be more vigilant. You have to be more selective. And if you think that the market's up, Dow's up 200 points, Nasdaq's up 200 points, they're up like 2%, everything's great, not every stock will go up. And even the best of the best, managing billions of dollars, as you all know, because I've posted so many times, try to explain to everyone that Kathy Wood, who's a brilliant lady, okay, who believes in future growth, and that's completely fine. She invests in companies which don't have any earnings but have great potential going forward, because she's a visionary, just the way Elon Musk was a visionary from 10 years ago. And look where his stock is. So her stocks are going to work too. But in the meantime, as the liquidity swamp is drying out, there is going to be um, massive volatility, and her fund is down. I don't know the exact number. I believe 15%, 12%, more than that, 20% just this year alone. And that causes, and because she has such size, specifically in the Nasdaq mid cap and small cap tech stocks, they when they are doing the forced margin sellouts, which I've mentioned probably zillions of times, and if you don't understand what that means, then please again go to Investopedia, go to Google, just you know type it in and try to learn. Those are the main causes of volatility. People say, "Oh my God, the 10-year government bond is moving up to 1.9%. So what? That's 1.9%. 5 years ago, it was 6%, 7%, 300% higher. And the markets were still doing fine. These are not normal rates. The 10-year government bond should be at a government bond should be at 3%. That does have a detrimental effect, because some of the stocks are so overvalued. That's the reason why they're down 60, 70%. off the highs. And some of them they've become value stocks because they have great potential, because the world is changing. And the only constant about the stock markets and the world is it is in a state of constant change. And some of them will be huge winners. If some of you remember, I do, because I just started on Wall Street around that time, years ago. The dot-com bubble, except they were bullshit companies. Their PEs, their price to earnings growth ratios were like 80 to 100. Now they're mostly maybe around like 26, 30, but they have obviously come down. So on a relative standpoint, stocks are overall pretty cheap, even the high growth stocks. But as we adjust to the new environment that I explained, draining the swamp, that's not a political term, all right? It's not a Washington, D.C. term, but draining the swamp of the U.S. economy out of liquidity, lowering the balance sheet, the $9 trillion Federal Reserve balance sheet. And I'm not here to give you a PhD lesson like I always said, from Harvard Business School or Chicago School of Business or, MIT on what that means. Please, try to teach yourself. There is going to be massive volatility, plain and simple. That's it. In the meantime, I hopefully, with my guidance, with my technical charts that I trade, we have delivered some very, very solid results. And I expect to do that more so as we go forward. But keep in mind, this is not a market you can go to sleep on. You have to always have one eye open. I don't care if you're an investor long term. Nobody knows what long term is. This is a short to medium term market. On that note, let's start looking at charts. And we will start off with what is this go to meetings thing? Okay. 1 second. Why do I have my firearm app here? Delete. Bear with me 1 second. I need to get off this stuff and put here. On that note, let's look at a broader view. Futures right now are down. S&P futures are down about 3.5 points. Big deal. Nasdaq futures are down 45. Big deal. The Dow Jones futures are down 25, which is actually no big deal. So this is your chart of the E-minis. And remember, this year is a year more so than ever, which is which you have to be a chart trader, period. Okay, I put my charts out on a consistent basis. You need to replicate those. If you can't, I'll help you. But you need to basically trade the charts. Markets are going to trading in a range. They're not, right when you think it's all over, it's going to bounce off support levels. We have to look at the internals. It's not that hard, believe me, because the hard part I will deliver to you all. You just have to figure out how to manage your money. Don't go hog wild. Keep a whole bunch in cash and play with the rest. Because we don't know day to day what's going to happen because of many different factors, interest rate factors, this BS that's BS is short for bullshit. Excuse my French. With us like sending in troops to Ukraine and stuff, which is the stupidest thing ever. Okay. And of course, our boys are not going to be fighting the Russians. I really hope not. That is the stupidest thing ever. And that kind of crap. So there's going to be political, like headline risk. Then you have Federal Reserve headline risk because these governors come out and then just say something middle of the day and the markets all of a sudden have a flash crash. And of course, the most important thing is the fact that the liquidity in the market is starting to dry out. So the Cathy Woods of the world are getting hurt big time. Institutions are getting hurt big time. Their returns, hedge funds returns, are actually terrible over the past 2 years, believe it or not. and they're the ones who are running the algos. So why aren't they making money? Because each of the algos are eating each other. And in the meantime, we're still doing good. We're still doing good. I would love to do better, but we're still doing good. So it is the survival, not necessarily of the fittest, but in this world that we are entering in 2022, the year of the tiger in the Chinese lunar calendar. By the way, China markets opened after 5 days today, so they're in a good mood. Um, this is survival of the nimble. Okay, even Chairman Powell mentioned in his last press conference, he said, be nimble and humble. I kind of like that. Stay nimble, stay humble, and you're going to nail a couple of great stuff. You're going to miss on a couple. But do not think that all of a sudden the market's just going to take off like a rocket and hit new highs. Nope. In my opinion, right or wrong, every person has their opinion. It's not going to happen. So here we are right now, and of course these charts have been posted repeatedly on the on my real-time Twitter feed, and this is a chart since 2020, the COVID bottom. We turned around on March 23rd. Please mark that calendar. I've said that many times. And that was the low of the COVID bottom, what I call a short-term generational bottom. Huge monster money has been made. And of course, we didn't know that the markets would move up this high despite the onslaught of the original COVID. And then, of course, now the variation of that called Omicron. By the way, anyone know how the hell they come up with these names like Omicron? Like, what is that? Is that they're trying to put down like Micron, the semiconductor company? Like, it's so stupid. Like, why don't call it COVID-2 or something? And by the way, Omicron is nothing but like, from what I understand, and you know, is just like a mild flu. And New York, New Jersey, and the eastern states, which are very crowded, cases have actually been coming down. Great news. So let's keep this simple. So this is a chart of the broader market, the S&P 500. Now keep in mind that the nature and the characteristic and the makeup of the S&P 500 has changed over the last couple of years. Can any of you tell me why? I.e., the components of the S&P 500 have changed dramatically, and that's one of the reasons why it is so volatile compared to what it was, let's say, 10 years ago. Can somebody tell me why?
Is that the big tech company entered S&P?
Yes, ma'am. Sue, like we say in New York, but baby, yes, exactly. Because so many tech companies have been added to the S&P 500, and believe me, more will be added because they are the ultimate growth companies, regardless of what the garbage that you hear on the news. Absolutely. US business, which I'm a huge proponent of, despite their faults and their failings, are the only real engine of growth, whether they be in aerospace and defense, whether they be in biotech, and specifically in technology. Because without our economic muscle, we are nothing. We are nothing as a nation. Now, who is M, who just entered the webinar?
Uh,
Hello? Min?
Hello. Hold on. Yeah.
Is this Min?
Yes.
Oh my
Hi.
God, great hearing you, Buzz. Hi, nice to well, not see you, but hear you.
Yes.
Uh,
Same here. Yeah.
yes, of course. So basically, Sue is absolutely correct. There have been so many companies, Apple and this and that, and please look up the components of the S&P 500, which are basically 500 of the largest capitalization companies in the US. There are so many tech companies, so the S&P 500 is quite volatile. Before, there were all the boring companies, like the Dow Jones Industrial Average, aside from one or two tech companies, is a very boring, index. And even that's volatile these days, right? So you're absolutely correct, Sue, and thank you for giving that answer. And everyone should listen to it, all right? So look up the components of the S&P 500 when you get a chance, and you will see that there are lots of tech companies in there, big ones, big ones. So 1 second. Okay, and so volatility, obviously is created there too. Now, if you look at this particular chart, let me try to get my drawing tool. Let me get the highlighter. So here was the COVID bottom. Here we are right now. We're slightly below the orange line, which is the 34-week, by the way. I'm not talking day, much more longer term chart, 34-week. First, I'm going to go through the external chart. Then I'm going to go volume. You can, of course, see volume is, quite rapid. Big sell days, buy days, green volume bars. Then I'm going to go through 3 of the best indicators that anybody can follow. It doesn't take a rocket scientist to figure it out, okay? Which is the full stochastics, the McClellan oscillator. 1 second. McClellan oscillator, and the MACD. Very simple stuff. I can put other fancy oscillators in there, the Arun and the, what's the other one that I used to use? The Kopak curve and this and that. But let's stick to simple stuff that actually works, It actually really works. So here was the COVID bottom. Let's look at the external first. And this is where we are. So overall, in between multiple weeks, this is each bar is 1 week, as you know. And I know you guys have the same chart, but it's important to realize what's going on. 2 weeks, small red candles, small red candles. 4 weeks here. And this is where we are. 1, 2, 3. And on the 4th week, lo and behold, as I walked you all through this big time, we broke through the red line. We don't want to cross the red line. The red line is the 50-week moving average. Now, if we go and stay for more, listen to this carefully. If we go, let's say, for example, over the next couple of weeks, we crash down and we stay below the red line. By the way, each of these lines are still trending higher. They're all trending higher. Like if you listen to the media and you listen to all these big shots talking on TV, we're going into a bear market, blah, 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 blah. There's only a few people who come and talk facts, not fiction. Most of the guys talking are all garbage. They're all fake news. They're trying to talk their book because they're mostly short. Majority of Wall Street and Wall Street fund managers and hedge funds, and that's the reason why they're getting blasted. Okay, they made a bunch of money when we had that big crash 2 weeks ago. Okay, or 3 weeks ago, whatever. Then they shorted more, and then they got their, excuse my French, their asses handed to them. Okay, because of this huge hammer reversal. So they're shorting again. I think they're going to be wrong. Why? Because I'm smarter than them? No, because I'm looking at things very simply, which we'll go over in the next couple of minutes. I'm looking at the internals. These 3 things that I talked about. And the internals are telling me that it's going to be okay. I'm not saying we're going to new highs. I'm simply showing you the bigger picture of where we can go and where we're going to fall from. So we have had multiple crashes like this. This one being very similar to what happened back in October. And this one felt heavier for a simple common sense reason. Can tell me why this one felt heavier? Think about it. It has nothing to do with like fancy Wall Street stuff. Why did this particular correction, which is now reversing, but this particular correction that started end of December feel heavier, specifically on stocks, of obviously, and the market? Can somebody think of? It's a common sense question. I mean, I'm not saying, It's okay if you guys can't, I'll tell you.
Is that because people fear about the interest rate rising and also,
Sue. You are
yeah,
overcomplicating the matter. Let me give you a clue, okay? We were here during the COVID crisis. We went all the way up here. So that's the first clue that I can give you, so you give the correct answer, because it's a common sense answer. Min, can you know, why did this particular correction that happened over the last 3 weeks, now that we're reversing for the last 2 weeks, why did it feel heavier? Like, oh my God, the world is ending kind of feel.
Well, I think because
Okay, let me give you another hint. I'm leading you to the answer. Because you know me, I like to look at things in a simple way, then I like to look at things in a complicated way. But let's look at the simple way. We were here during COVID. That was a real, unbelievable crash. There were mini crashes all along the way, but it never felt this heavier. And I'll give you a clue, like I'm literally leading you to the answer. Look at this chart.
overreaction.
Oh, okay. You guys are like rocket scientists. Very simple, because the markets were a lot higher. Simple
Oh yeah.
answer. It's like when you're walking up a hill. I don't know if you guys, I go hiking with my dogs. I have friends, we take our dogs, and we don't have like mountains in New Jersey, but we have some nice hills which are pretty high. And we go to upstate New York sometimes, which have mini mountains. So when you're here and then you keep on walking up the mountain, then even a little drop as we walk down feels like, oh my God, that's the only reason. It's all psychological. If we were here and we went down a little bit, they didn't make a big deal about it. And like I always say, every correction, every technical correction in the stock market happens, every crisis happens, is the same for different reasons. The only reason, ladies and gentlemen, mark my words, that it felt so hard because the valuations from a financial standpoint got overstretched. We went a lot higher. S&P was 2250 at the bottom of this COVID mess. S&P went to almost 5,000. So a small correction from the height up feels like, oh my God. The sentiment in the market right now, ladies and gentlemen, is so bad that it is beyond what it felt like at the bottom of the COVID crisis. They're all talking doom and gloom, except we are almost double from where we were on March of 2020, which, ladies and gentlemen, is only 2 years ago. And we're not even in March. So even if we fall down to 4,000, which I have a mark here, which I've shown you guys this chart before, even if we go to 4,000, which is another, like, 400, 470, 444. So that's another, let's say, 3,000 points on the Dow. Okay? It's still little less than, it's almost 80% higher than where we were at on the bottom of the COVID crisis. You have to look at the market the same way. Once you start looking at the market in this particular matrix, okay, you're going to be a better trader. I had a bunch of people cancel, obviously, because they don't follow the charts. They're doing stupid things. They're getting excited over one stock or another. What do I keep on putting on my Twitter feed every single day? Selective positions. Don't go crazy. Don't go crazy. You have a diversified position, small money on each of them. Doesn't matter how big your portfolio is or how small your portfolio is. Well, the bigger the portfolio, you can diversify a lot better. You're going to get a couple of buyouts. That's not a guarantee. That's almost the highest probability thing I can tell you. Bunch of my stocks are going to get bought out this year in the first half of this year before the midterm elections. Now, if you're not in them, it's your problem, not mine. It's going to happen. Companies buy other companies. This comes from my Wall Street experience. Right before interest rates start ratcheting up, because they use leverage to buy other companies. When a company says, I'm going to buy you for 40 billion bucks, of course they have cash at the side. You think they're using all their cash to buy 40 billion bucks? You guys own homes. If you're a real estate investor, do you put real cash to buy another $500,000 place as an investment property? No. You want to put down 10-15%, borrow the rest at a low interest rate in a nice area, and you're hoping that within 1 year you can sell it for 30% higher. And with your leverage, you make a lot of money. So big companies use the same leverage. They're not using, when they say, oh, I'm going to buy this company for 120 billion, like Activision. Microsoft bought it for God knows how much when the stock was at the dumps, right? The gaming company, Activision. They paid them a 50%, almost a 50% premium. You think Microsoft used all their cash short? Of course, Microsoft has freaking so much money. No, they use part of their cash and they use leverage. They borrowed the rest at the lowest interest rates known to man or woman in the US. That's how businesses run. You think Trump got so wealthy, Donald, in New York, by using his own money? No. He leveraged his money big time and built a real estate empire with his brand name, from here to India to Turkey to all over. That's what smart people do, legally. So corporations do that too. Okay. Let's go back to the charts. The only reason why this felt like this, because companies, first of all, we were a lot higher. And if you ever walk up a hill or a mountain, and I know my good friend Mike has walked up, to higher heights in many different places, what happens to oxygen? What happens as you keep on climbing? Min, Sue, answer. What happens to your breathing as you keep on climbing higher and higher? If you physically were walking up a mini mountain or a steep hill, what happens?
You were breathless.
Thank you. And why do you get breathless? Because your oxygen, it's lesser oxygen. You're consuming less oxygen because the air gets like less and less. It's the same thing with stock markets. You keep on going over valuation, you get breathless. Which, by the way, was a crazy 80s movie, right? Breathless? Okay, that's a different day's topic. Exactly. So we had a valuation correction. And yes, interest rates was one of the reasons. The Fed saying, hey, we're going to start to take money out of the economy instead of pumping 30 or 120 billion or something crazy like that. I can't remember what the quantitative easing right now is into the economy. So what's the big deal? The big deal is that individual stocks, high growth companies, great companies get cheap, just the way it did back in 2000. Except in 2000, there were lots of completely garbage companies with the name .com next to them. That's why they call it .com bubble. Okay, watch it on YouTube sometime. What is the .com bubble? Well, this is not a .com bubble. These are real companies with real prospects, and of course some garbage ones too, but far, far, far fewer. Amazon and Apple and all these great companies, tech, semiconductor companies back in 2000, they almost were done. And they said, oh, I remember You can Google it. They said, oh, Google, Amazon, they're not going to survive. They're all bullshit. Exactly. Bullshit, right? Exactly. They became giant monster. So my job is to try to select the companies that are going to be the Amazons and the Googles and the Apples and the Nvidias and the AMDs of the future. Am I that smart? No. Do I know a lot more than all of you guys put together? Yes. And those are the ones that I put across, and the names are all in the Twitter feed. Of course, as time goes on, I learn more. I put on a few more names. And the Robloxes of the world, which I think is the ultimate year for Roblox, is this year. I remember Facebook like 10 years ago. They said 8 years ago. They said, oh, Facebook is done. Now they're saying Facebook is done. The Democrats hate them. Donald Trump hates them. The Republicans hate them. Everybody hates them. But who cares? They said, oh, Netflix is going to be completely out of business. They said Amazon's going to be completely out of business. It's all garbage, guys. Okay, so let's go into the internal. So small correction. We held the, let's clean this out. So I'll keep this. Hold on 1 second. Pen. Okay, we bounced off this. So keeping all of my opinions aside and all your opinions aside, this is the 50-week moving average. If we stay below the 50-week moving average for more than 2 weeks going forward, the market is going to be inevitably test the 4,000 level on the thing. Put out some shorts, lessen your long positions. I don't care whether you're a long-term believer, whatever company, it does not matter. This is a literally 99% algorithmic high-frequency trading robotic market. They don't care. Forced margin sellouts. They don't care what the prospects of a company is. It's automatic selling. Massive volatility, massive fluctuations. So don't be dumb. Trade smart, like I say. Hashtag trade management, hashtag trade smart. Now, does that mean that you have to watch the screen a lot more? You have to put, don't have to fall in love with anything? Yes, you have to change your mindset. You have to change your mindset. So, but we're not there yet. We had a nice long tail hammer reversal. This is a serious hammer reversal. We stayed above the uptrending. Remember, these are still uptrending. If we stay more than 2 or 3 weeks below this line, which I don't know if it's going to happen, I believe it won't happen because we're going to look at the internals in a second, then you can short a reasonable amount and just walk away. And you'll be very well rewarded in a week to 2 weeks. But we're not there yet, but I'm showing you the bearish case scenario. So far, what we are at right now is we are trying to cross over the orange line, which is the 34 moving average. And if you look carefully, this yellow line here, don't forget, this is the 34, always in orange. That's my color scheme. The red is the 50, whether it's a 50-day, in this case, the 50-week. The yellow line is the 5-week, or in the case of the daily, is the 5-day. The blue line here is always my color scheme, is the 20-day, or in this case, the 20-week moving average. So we basically have a downtrending 5-week moving average. In order for the bulls to reclaim their territory or their grazing grounds, I mean, you know, if you ever saw the Travel Channel stuff, you saw the bisons. I'm sure you guys know what bisons are. If you don't, then please help you God. Okay, they like to graze over hundreds of miles of plains. And us in the US, we had not millions, but thousands and thousands of bisons, some of the most beautiful creatures in the world. Well, guess what? You know, So we are basically, the bulls need to, in order to get to the greener pastures, we need to cross over and stay above the 45.10 level, and we need this downtrending 5-week moving average to start to curl over. And if we go over this 45.70 mark or 45.80, and I repeat again, this is a purely technical market. I'll be throwing out charts as I have been repeatedly. And if you guys are not following charts, you are going to be destroyed. Destroyed. Now, I'm not saying you need to be a 5-minute trader, but you need to, even your longer term swing positions, you have to watch these things. So if we cross over that, hallelujah. Like what's that? These guys like to say, oh, is it safe to buy yet? Every time I hear that from an idiot on TV, I say, dude, is it ever safe to buy? That's why we call stocks risk assets. You want safety? Go get go walk in the park, get a lollipop from Carvel or something. That's safety. You want safety? Make, what is it, 1.9% by putting your money in a U.S. Treasury bond for 10 years. If that excites you, good for you. Good for you. That's not what we do here at Clueless Day Trading. We're looking for real returns, and we are getting it, but you have to do it the right way. So that's it. So all these lines are still trending higher, which is really good to see, despite the fact that we had 3 weeks of a massive collapse. Then this 4th week we turn. And remember, there's a very important chart that I put out there, which I'm not going to show you now because it's your job to look through all the hard work that I put through. I told you that the 4th day was the follow-through day. That chart was very important. After the crash, the 4th day, because last Monday we crashed, the 4th day was the real test as to whether or not we would follow through, and we did. 3rd and 4th day, and that's a big thing. Okay, so that's it. Now, let's look at the internals. These are things which basically tell us the health of what is happening on the external. Externals are just reading chart patterns. The internals are telling you what your blood report is. Okay? When you go to the doctor, tells you like, oh, your blood report came through, your cholesterol's going through like God knows what, you're like, you got this or that, like. So let's get the drawing tools out. And it's very easy to see. Stochastics are turning. And this is on a weekly basis. I'm not talking what's happening tomorrow, a half an hour. I'm not telling you what's going to happen today. I'm talking what is happening on a swing basis going into the month, into later February and March. And don't forget, March is the first quarter. March, what is it, 31st. And I still believe the money managers are not going to go on a liquidation sale, which they already did because they sold so much. I believe the first quarter will end on a pretty solid note after a really, and I'm not for us, but I'm talking general market, after a really heavily volatile and heavily red January. Look at this, it's turning. What more can I say? It's turning. That tail says it's turning. The fact that we're staying over the 50-week moving average, and we can come down and test for 4,400 again. And that's going to freak everybody out. All those talking heads on CNBC and Fox Financial Network and Bloomberg is actually pretty cool. They stay calm. Fox guys, the CNBC guys are going to be like, oh my God, we're having another 10 to 1 down day, all sectors down. Every time you hear that, just buy. I'm serious. Every time you hear those guys scream like, oh, we're having all sectors are down, blah, 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 and I'm showing you the McClellan oscillator at minus 300, please don't ask me, just buy. Buy your favorite stocks or buy the QQQ, buy the S&P. Like, I don't care what you do, just buy. Because you will undoubtedly, and I've been dead right on it almost 100% of the time, you will get a reflex rally where you can make a lot of money. Okay, so this bottom, look at this. This is a rising wedge. So we fell if the interest rate thing didn't pop its head and Powell said, oh, we're looking to raise rates faster, inflation is moving higher. And it's a question I'm going to ask in a minute, and I know you guys will know the answer. The real component of inflation, what's really causing inflation to go nuts? So short-term inflation to go nuts. So here we are, 1, 2. This was back in October. Look at this, now the bottom. This was back in September, oh wow, of last year. Another bottom. This was the COVID bottom. So do we need a rocket scientist to figure out that when we get down to these levels that we should stay long at least for a couple of weeks? No, we don't. So that's your stochastics telling you we're heavily oversold, and these are big companies. I'm not talking about mid-cap companies and this and that. So let's take a look at the McLaren oscillator. 1 second, ladies and gentlemen. Oscillator hit more than minus 300. Oh my God, those are serious. Like baby thrown out with the bathwater, and then they're going for your neighbor's baby to be thrown out with that bathwater. Like ridiculous panic. All right. Minus 200 is bad enough. Like minus 300, like 350 or whatever. This was the COVID crisis when the war was supposed to end. We went to minus 400 almost. Now we are at minus 150. And in your head, and in the majority of the investment public, the public, who invest in the market, and Wall Street, and all these great strategists, and all this, most of them, other than a few, and the few are Mike Lee, who's been dead right on the market, Kolanovich, quant genius, Katie Stockton, technical genius. She's the best. Not only is she good looking, she's the smartest technical analyst in the world. And I've been tracking her since the 2000s. She's the best. And I had the opportunity back on Wall Street to actually sit in I believe she was with Deutsche Bank. I forget who was she with. We had kind of invitations to attend her technical webinars. And believe me, when you see her on TV and she talks, you'll see a lot of the things that I talk about. Okay? So, she's short-term bullish, medium-term bearish. Exactly what I'm explaining. So, look at these extreme points where the world gave up and we were all supposed to just die, and the markets rallied hard. So I still believe we still have room to move. We'll probably test if we have like a solid, whatever, different things can happen. Omicron disappears, right? That kind of stuff. We could have a rally up to the 4,800 level. And I've shown short-term charts showing you all my levels. So I'm not going to even repeat it. Your job is to go through my Twitter feed and look at those charts. And if we're truly going into like a cyclical downturn, then we're going to move from here down. We're going to address 4,400 again. Like I said, 2 or 3 weeks below 4,400, you can rest assured that we are going to test 4,000 on the S&P. But that's projecting a very bearish view, but I'm just showing it to you. So we have a stochastic bottom turning. We have the McLaren oscillator turning. The MACD is the only one that still needs to get out of bed and start walking and start running a little bit. All right, so let's look at the MACD. Like the greatest investors in the world always say, cut out the noise. So what we're doing here is we're cutting out the noise. We're not dealing with politics. We're not dealing with things. We're just looking pure and simple on the chart. So what does the MACD need to do? It's quite simple. The MACD needs to basically start to shrink, go over baseline 0, And this, and just so you know, and let me ask you this question, because this is something, listen, I'm not managing your money. You have to learn how to manage your money. What is something about the MACD, which I just noticed myself, ladies and gentlemen? So let me just clear this out. If you can bear with me, give me just 10 seconds, please. 1 second. Please look at, actually, while I'm gone for about a minute, I want you to, because this is the real essence of reading the tea leaves, okay? This is what happened during COVID back from February of 2020 all the way down to the end of March. Look what the MACD did. Look what's going on right now. Look at these readings, which are very positive. I'm already giving you the hint, so I want the right answer. I do demand the right answer from such smart people like you guys, okay? Just look at this very carefully. Keep in mind that we're bouncing off the trend lines. I'm already giving the clue. I've explained this before. The trend lines, the 50, the 34, the 20, which are the medium term. These are the longer term, 50 and the 34 SMA, simple moving average. The 20-day is medium term, simple moving average. In this case, a 20-week, that's a long time, are still trending higher despite the thump that we got. Big volume green, stochastics turning, McClellan is still creating a positive divergence because it's still, not at 303, it's at 150 and starting to move up. Look at the MACD, compare this, and I'll be back in about a minute and ask my question. Okay, I'm back. Are you guys there? Hello?
Yes.
Okay, so I'm going to give you one more clue, and then hopefully somebody will answer in 10 seconds, or else I'll explain this. Of course, I'll explain it. So we had all these oscillators hitting the same levels, almost the same levels of what happened back here when we were at 2200 S&P. We are like I said, hugely higher. We are 100% higher, 2200, 4400. We're not even at 4400. We're like 120% higher from this. These oscillators all hit the same levels, and the MACD. So what's the answer? What is the difference between these indicators and this? Anyone have it? Like, just say no. I didn't get it, please. Mike, Min, Sue.
Oh, is it still above zero? Way above zero?
Exactly. Another A+ for you. Exactly. Well, how come the MACD didn't hit this? Because the real money is not selling that hard. The fast money is. The hedge funds, the institution running the algos. Thank you very much, Sue. We should be down here because every one of these oscillators got completely oversold. This one, and if somebody wants to know what the MACD is, please Google or go to Investopedia, because I don't have the time to explain that. This basic indicator, which is also a great indicator, why didn't it go down here? Exactly. That is known as a positive divergence. That is known as a positive divergence. Every single indicator hit the COVID-19 March 2020 levels. Okay? Every one of them. But the MACD is still up here. That is known as positive divergence. So these are the reasons. Simple, but hey, I've been right before and I'll be right again. Almost convinced. Okay? Unless Powell drinks too much. Does he drink? I don't know. Can anyone find out if Jerome Powell drinks? I know Trump didn't drink. Like, what the hell? You know? He was the crazy guy. Does anyone know why Donald Trump doesn't? He's like a Muslim fundamentalist. Like, he doesn't drink. Like, why he doesn't drink? Does anyone know that?
Yeah, he explained it.
Why doesn't he ever have a drink? He used to drink a lot, like when he was young. That I know from New York days. But why doesn't he drink anymore?
Yeah, he said
His
his
brother
brother
was an
died of
alcoholic.
drinking.
Thank you very much, Mike. Okay? Because deep down, Donald is a real guy. Aside from, mouthing off here and there. His brother was alcoholic, and his brother died of alcoholism. And that hit him really hard. That's why he doesn't drink. I always said he should have a drink, man. All right? Anyway, that's a different topic. You know me, I'm a little crazy. But we have a positive divergence here. End of story. I mean, I have nothing else to say. I mean, this is so glaring. And you never hear this stuff on the national media, right? They're bringing in all these big shots. They're talking, this and that. They never talk about. Only people who talk these stuff is Marko Kolanovic from Serbia, Katie Stockton, All-American, smartest, beautiful lady, Mike Lee, a great Chinese immigrant, and a couple of other real technical analysts that come here and there. The rest of them, they never talk about this stuff. I had members back in the day said, Frank, you should be on CNBC. Yeah, that's really. I'd rather be incognito than put a gun to my head. I'd rather go to my shooting range, which I go every week. All right? This is it. Now, the stage is all yours. Sue, start off. Which stock do you want to look at? Because we want to wrap this up in the next, couple of minutes. I'm so happy that you guys are here. I'm so happy that I started restarted my webinars again. Starts on the Twitter broadcast, and I intend to keep up with this and get people excited again. So, Sue, throw out a stock, and then Min and go ahead.
I just want to look at the QQQ and IWM and also Warren Buffett's Berkshire Hathaway be?
Don't ask me about Berkshire Hathaway. I don't trade that. I don't look at it. So that one I cannot cover because in all full disclosure, you can give me the symbol. I can look at it, but that's not my cup of tea. So let's still look at the QQQ. I put out some fantastic charts on QQQ. We have traded QQQ very well. Short and long. Short, of course, on a very short-term basis. This is your QQQ. It's the same story. We have, and my short-term charts on QQQ have been put almost every day. Every day, Sue. You know that. I know you had some issue with your Twitter handle, which got hacked. By the way, did you send me your new Twitter handle? Do you have access to my Twitter feed now or no?
Not right now.
Well, then in that case, you're just driving blind. You're going to crash on a tree or fall off the cliff. I asked you repeatedly today, my friend, to send me your Twitter handle. Why haven't you have a new Twitter account, right?
No, I haven't had one because if I just get one, they're gonna delete my account right away. So I gotta to get everything new so that they don't
Oh
link.
my God. So let me get this right here because we'll talk like separately. We don't want other people to hear about your problem. So Twitter is deleting your account, so you don't have access to the ultimate Clueless A trading real-time Twitter feed. Is that what I understand?
Yeah, not for a while.
So in that case, you don't know what trades we're doing, where we're making money. You have no idea.
Not for a while. Yeah.
Oh my God, we're gonna talk about this. It's great. So I'll figure out a way where I can notify you. So you can't even. Anytime you open a Twitter account, Twitter is shutting it down.
Yeah, because if it recognized me, like from phone number, IP, whatever, it recognized me, it delete my account.
Did you do something bad?
No, I didn't. I just follow some people they don't. The censorship. You should know it.
No, I should know it, but censorship happens because of a reason. I don't want to get into it right now. You must be something where Twitter is constantly blocking your account. I don't want to talk about it right now, but obviously you were either following or tweeting out other people's tweets, which were not necessarily within the guidelines of Twitter.
Yeah, exactly. I follow those people whose account are deleted by Twitter. That's the reason they delete mine as well.
Then don't follow those people. Simple. Like when you go to the doctor, this is an old joke. It's true. The guy, lady walks in, the doctor said, "I have, when I stretch on the right, my back hurts." The doctor said, "Simple. Don't stretch on the right." So don't follow those people, because we've been making some serious money here and there, and quite often, and guiding people, and you have no access to the account. This is crazy. We'll talk about it. Okay, we'll figure out a solution. So here is your chart on the QQQ, which I've been posting very often, this longer term chart. So again, we are slightly below the 50-day moving average, and this is starting to turn. It's a similar chart to this. So net, I did put out there last week that worst case scenario, like the next set of all the big techs have already come out, right? So we're good with that. So net, worst case scenario, the Qs are going to go to 313. See this big red line right there, right there. But in the interim, we have the Fibonacci levels, and this is another line that I want to draw, which is a major support, which is this breakout here, and that is exactly where we bounced off from, which was, one second, show price on the left, which was 343. So 343 is a major support level on Qs. Aside from that, we had huge volume, huge. This one-day buy on the 24th of January was the largest short covering plus real buyers of 674 680 roughly, 685,000 shares of Qs traded on the 24th. It is not a joke. And if you go all the way back, you do not see a bar like that. This is not stupid money. This is real money coming into the market. Short covering, of course, which is forced buying. Shorts covered. And this is a significant bottom. So the real major support is 343. And even if we go to retest that, it's fine. We played some shorts on the Qs, worked out fantastic. I covered very quickly, a little bit early. Then on Friday, we had this volume, which was another. Look at this. I'm putting the cursor right here. We have had not this type of volume since March of, well, we haven't had this type of volume. And this chart goes back to March of 2019. This is big. And of course, Amazon and Google, which are the biggest components of the Qs, did so well. And even Facebook, they're going to bounce that stock like big time. Just like Netflix. They bounced Netflix almost 150 points after they crashed it. And all that is happening is because of the volatility is created by these hedge funds who are getting squeezed because of lack of liquidity and the Federal Reserve draining money from the swamp. And that is the main reason why those stocks, I mean, Facebook down 26% in one day. Come on. That goes in the history books. 15%, 10%, I can understand. 26%, come on. It's not even funny. It's a joke. Anyway, and I don't even care about Facebook. I'm not in Facebook. I don't like Facebook. It doesn't matter. But I'm just telling you. So that's Qs. Now, the next one that you want to see was IWM, which is the small cap Russell 2000. And the Russell 2000 actually doesn't look that good. Doesn't look that good. Because you look at this chart here, this is weekly charts that I'm showing you. Okay. It is well below the 50-week moving average. Let's actually take a look at it. This was the bottom on when it was $95, back at the bottom of the COVID crisis. I still think the Russell 2000 can go lower. Even though there's heavy short covering volume, stochastics are kind of bottoming, but no crossover. So I'm not, that's one of the reasons why I haven't really suggested the IWM that much. And the Berkshire Hathaway, I'll take a pass on that. Min, what do you like to see? We have to wrap up soon.
RBLX.
I'm sorry, what?
RBLX.
What
Rob,
X?
robotics.
Oh, you mean Roblox?
Yes, and
Yes,
the
yes.
CFLT.
Okay, one thing at a time. Let me cover. Now you have full access to my Twitter feed. You've seen my charts on Roblox, correct? You have read
Yes.
my comments on Roblox. Okay. To me, Roblox is a screaming buy. Screaming buy. You scream, you buy, you scream again, you buy again. I'm that serious. It's a screaming buy. That's my opinion. If you look at it short term, okay, the bottom is basically that 54 level. Right there. It is such a defined chart. This is Roblox when it came public. Okay, and then it went crazy. Let's look at the weekly on Roblox. Hold on. So this chart is so defined, it's not even funny. So the weekly chart is saying we might go back and retest 54 again. We might. But I'm looking at the daily chart and the 1 hour chart. That's the reason on the Roblox calls, I like to buy end of February, maybe March. In my opinion, from a Wall Street standpoint, where my original career started, well, it started in Boston and then Wall Street, Roblox will get bought. It'll get bought. They are deep into the metaverse, and whether one believes in the metaverse or not, they were non-believers of the internet back in the 80s. They said, oh, the internet is a joke. Netscape was the company, and you had to type in words and all that garbage, right? And what happened to the internet? It changed the world. It changed our lives. Well, Internet 3.0 is here, and the tech guys know it. Okay? But as human beings, all of us are slow to adapt. Roblox, companies like Unity Software, companies like which are in the forefront, Facebook, which is kind of the granddaddy. These are the guys selling the tools to create the metaverse. And the metaverse is real. It's not just something that you go in there and you kind of walk around with a funny face in there. No, it has applications beyond gaming. Qualcomm CTO, Chief Technology Officer, was on the other day. He said something that stuck in my head. He said we have a chip designed for a camera that you can put inside, just like you can hold it, put it inside the engine of the car. It will tell you before you buy the car what exact problems there are with the engine, and it uses 3D metaverse technology. And Qualcomm designs the chips. That's why I'm so hot on Qualcomm. Think about it for a minute. If you knew what the engine problems were on a Jeep or a Range Rover or a BMW or a Hyundai or a whatever car you drive, a Ford F-150, one of my favorite trucks, okay? Before you bought it, would that revolutionize your purchasing decision? Absolutely. So this one, very simply, I believe is going to $70. And after that, I've shown the chart, there's a gap fill. The gap fill is 80. But I think the stock is ready to go, and every single indicator off the bottom is looking pretty damn good. The McLaren oscillator didn't even crash, and the MACD is just about to turn. 1 second, let me just put this up. Oh my God. What do you guys see here? What do you see here? If you don't understand these charts, all of you are done with trading. Just don't trade. Just don't invest. We have a MACD crossover on this falling wedge double bottom. And this arrow wasn't put there by me. This was automatically generated by Thinkorswim. That is a double plus, because my charts are equally good, if not, well, actually a lot better. What is happening here? Do you see this? We have a MACD crossover and the first green bar. And if this green bar even goes like this, we're going to blow past 80 into 90. I like to play this stock, these type of stocks, on a $5 to $10 increments, both in common shares or in options. And you have to buy some time. And don't get freaked out because Cathy Wood is getting knocked out in the boxing ring because of forced margin sellouts, because she used to own a bunch of that. I'm sure she was forced to sell out. So good, Cathy, sell it to me at the lows. I'm dead serious. They're great companies. She didn't want to sell, but she sold because she was leveraged. And she's strong. I like her. She comes out fighting. She goes, the market's reading everything wrong. Yes, they are, especially emerging growth companies. Just the way they said, Microsoft. Does anyone know that when Microsoft went public in the 1980s, that no investment bank would lend them money? They had to fund their whole IPO through junk bonds. And Michael Milliken, the man they sent to jail and came out, he's a great guy, by the way, okay, funded Microsoft. They said, Microsoft, oh, what is that? Windows, it's a joke. We can't fund this company. Apple went bankrupt at one point and is the largest $3 trillion company in the world. Roblox will get bought out. My opinion, end of story. And the technicals, I just love it. Do I love the company? No, I don't care. I'm actually going to download their app and see, what happens in that world. The kids play Roblox, but did you know that the biggest of the biggest, most expensive designers in the world, and Nike included, are in the metaverse on Roblox? Hermes, Louis Vuitton. Okay, they're all on Roblox. I think Kim Kardashian is going on Roblox. It is wild stuff. Read up on the news. It's the ultimate metaverse world. Now, the average American will say, "Oh, metaverse. What the hell is that? Is that a new drink?" Well, that's the reason why there are 700,000 open jobs in the high tech field, and we're screaming around saying, "Oh, why are the Indians and the Chinese and all these other guys taking the job?" Well, why didn't you freaking study and try to understand that and get those jobs? Exactly. You know what I'm saying? This is a brand new field. I think it's phenomenal. There'll be other companies coming in, Unity Software, Roblox, Qualcomm in the chip world, powering the Roblox thing, Facebook leading the charge. That's the next frontier. And Kathy Woods will rise again. So that's it. All right. Any other stock you want to see quickly? I got to wrap up.
Yeah, CFLT and Piton.
1 second. CFLT. What is this stock? Confluent. Never heard the name. Chart looks okay.
Are you kidding? You
Uh,
made big money on this stock before.
Never traded the stock. I am not kidding. I never made any money on this stock. I don't even know what this is. What is this? Software company?
Yeah, it's sort of real time, like a help a manufacturing company to see how their process is doing.
Oh, you said healthcare manufacturing company?
No, real time. They offer
Real.
this kind of software, to help manufacturing company to see what their products are doing, like
Oh,
real
okay.
time thing.
No, but I'm
Yeah.
not joking. I've never traded this stock. Never traded this stock. But the chart looks great. I think it's not that volatile a stock because the trading range is basically between 58 and 78. So once it breaks out, this is the major downtrend line,
Mm-hmm.
68. So very simply, we're looking at 75 on a short-term basis.
Mm-hmm.
And of course, if it breaks out, the max move that I can see on the stock is 79. But everything else internally looks pretty damn good. Look at this. It's these are very good underlying indicators. Very nice. Crossover happened back on January 31st. We have nice green bars. Um, but like I said, it moves in a very tight range, and so that's it. What's the next one?
Piton, is it going to be bought? I mean, after hour, it's gone up
Oh,
like
yeah.
20%.
I know. I saw that. I saw that. You see, this is what happens. This is what I was explaining earlier on the webinar. When companies get smashed out, first of all, I was never hot on Peloton. I think, it's not a fad. I know my friend's wife, she uses it. She is a Peloton freak, and all that is good. I just think it's become a commodity, And if you remember back in the 1980s, the only hard drive which was revolutionary was a company called iOmega. Anyone remember that? You know, it's back in the 90s too. It was like the only place where you could actually, save your videos or whatever. It had a slot. I still have it, old my iOmega back from my Wall Street days. So it becomes a commodity. When it becomes a commodity and everyone uses it, margins drop. So I particularly don't care, but I think that move is exactly what you're talking about. Came out on Friday. The stock moved from 24.35. Like I would be like jumping, like, oh my God, it's amazing. But you know what? I can't really chart this because the stock is a broken stock. So if you look at the weekly, it's completely broken. If they don't get bought out, the stock is going to go to $17. If they do get bought out, then let's look at the daily. Like chart wise, it's a joke. If they do get bought out, maybe somebody buys it at 37. Where's the stock right now? The stock is at 35. Wow, look at that. You know, so I have no opinion on it. Peloton is a joke right now. Okay, unless somebody
Okay.
buys them out, the stock is done. Unless, I repeat, unless somebody's buying them out. Now, if Jeff Bezos, I think I'm pronouncing his name right, they said Amazon might buy them out. That was the rumor, right? I don't see any underlying value on Peloton because number one, I always said they're completely overpriced, and the subscription model. Hold on, the subscription model is fantastic. Like one of the analysts said, Peloton should become like a social media company. Like everybody's talking to each other saying, hey, how much weight did you lose? You know, sure. Instead, they're just focusing on their subscription service. Maybe they should create like a social media hub where Peloton users can talk to each other directly. You understand what I'm saying? So I thought that I thought that was a good idea. Aside from that, I think the company's business model is just garbage because it's like what? Like after you buy a Peloton, what are you gonna do? Buy 3 more? You know, I mean, that's it. Like you know, otherwise it's a great product, but just because it's a great product doesn't mean they're making money, and that's the reason why the stock looks like this. From 171 down to 24. This is not metaverse. This is not the new frontier. It's basically a bike on a stand with like imagine if you put your iPhone on a you know, if you have a bike, you put it on a stand and you start biking in your place, right? So you're sweating and everything. You have your iPhone and you put yourself on Zoom, and 30 other people are doing the same thing, and you're screaming at each other, saying, "Yeah, you know," and playing some music in the background. Well, that's Peloton. That's the reason all the big boys sold it. End of story. I don't care about the stock, but I'll buy a few calls just in case they get bought out. And some crazy big ass company will buy them out at a nice premium. And that's the reason why the stock ran up on Friday. All right, Mike, do you have anything you want me to look at? Now, companies that I like over the long term as a great investment, great American companies, I love Boeing. Okay, I think Boeing is in definitively in the right spot, and I think Boeing is going to go at one point to 278 because China has now almost certified the 737 Max. India is buying it crazy, and every nation in the world, regardless of the politics, loves Boeing planes. And on top of that, Boeing is in the defense industry. Boeing is into aerospace. They're going, I mean, not aerospace, I mean, going out to like different planets and all that stuff, satellite launches. So I think Boeing is a great company, and I think this stock is one of the best stocks to buy from a Dow Jones Industrial Average kind of thing. So of course the other stocks are there. They're all on Twitter. Sue, it's late tonight, but I will call you tomorrow. We will get you connected. Okay?
Yeah,
And
sure. Thanks.
yes, and we'll start doing our direct advanced coaching sessions. I'll be doing it this week with you. We'll figure out time and we'll do it. Guys, thank you so much for letting me blabber for the last 1 hour and 40 minutes. Oh my God, you know, it was fantastic. But now you can say that I am still live. I'm not a robot. And please follow my Twitter feed. You will get so much information, not too much, not TMI, not too much information, but real actionable information. We're doing quite well. And of course, I've been buying some smaller stocks, which have been doing very well. Like a big shout out to Splash Beverage. I mean, look at this stock, which is SBEV. We've been doing very well on that. Now, this is the kind of stock which is just on the start. This has nothing to do with interest rates. This has nothing to do with Peloton. And look at this. The stock, in my opinion, is going to $7. This is a good looking chart, a bull flag in the making right here. Just show it to you. These are the type of stocks, in my opinion, that you should always have in your portfolio. It's a brand, it's a company that used to be at $1.27. The beverage company, they're signing in with all the right distributors. And again, this could be another monster beverage, or somebody comes in and said, hey, I like you. Look at the heavy volume, heavy. Okay, all the indicators are in the right spot, even though I'm coloring it in red. And these are the kind of stocks I told people to buy it around 2. It is at 4. That's 100% return in 3 weeks, ladies and gentlemen. So please broaden your horizons, diversify. There's a lot of stock I can cover tonight, but then we'll be sitting here till 4 in the morning. I will be, again, doing it on Wednesday or Thursday. And any questions, DM me, listen to my Twitter broadcast, and get a lot of referrals, because this is the year that investors and traders are going to look really stupid and lose a lot of money if they are not trading tactical charts. And that, my friends, is a guarantee. That I'll tell you that right now. And they don't know what's going on and why the volatility is coming. I don't care. All I know, I'll be trading my charts like a hawk, taking profits quicker than later, and not trusting the market whatsoever going forward. Like Reagan said, trust but verify. And the only way you verify is by trading, trading tactical charts. The charts have been dead right. We just need to manage positions better. On that note, let's have a great week. Futures are looking good. They're still red, but looking good. And let's make it the year of the tiger, the Chinese lunar year, the year of rebirth.
Yeah.
It's a year of rebirth, year of hope, and year of hard work and focus. On that note, we'll see you guys shortly. Bye-bye.
Thank you. Bye.
Thank you. Bye bye.